Hello everyone, and thank you for joining us for today's presentation as part of the Industry Insight webinar series. The topic this time is 6.5 legal accounting resolutions for the new year. Speaking today will be Erica Birstler. Erica Birstler is the Director of Strategic Communications at CosmoLex, developers of an all-in-one cloud-based legal practice management, billing, and trust accounting system specifically designed for solo and small law firms. Erica's degree is in business administration, and she has over 6 years of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica has given numerous presentations across the country on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance. The presentation today will be followed by a Q&A. Please enter your questions into the question box in the webinar panel on the right side of your screen. All questions will be addressed at the end of this presentation. We are recording this webinar, and we will be sending the video and a follow-up email in a few days. We'll also post this video on our blog, which again is lawtechnologytoday.org. Thank you all for joining us today, and we'll now begin the webinar.
Great, thank you so much. So let's go over what we will be covering today. So first off, this is a legal accounting webinar, so we do want to cover a little bit of the basics of what exactly is legal accounting, and then the 6.5 legal accounting resolutions for 2017. And how does integrated accounting help overall? Considering this is an accounting-focused webinar, there are many tools that can help you meet a lot of these resolutions. So first off, as I stated, we want to talk about the basics of legal accounting. What does it consist of? Now, many businesses have accounting that they need to do. That's really this first part of the equation, the business accounting. That's the back office accounting, facility payroll, the computers, those rent expenses, those types of things. Every business faces that. They need to prepare their profit and loss, their balance sheet. That's pretty standard. However, there are some specifics that are unique to law firms, such as matter management, dealing with the various matter costs. That's that second item. What are those matter costs that need to be reimbursed? And how do they get reimbursed? That's that income portion of that. Fee advances and retainers. When you're managing client funds, they need to be held on account for legal fees, expenses, sometimes for third parties. You might be the fiduciary for. All of those need to be handled properly and in compliance. And that is something that is very unique to law firms. So all of these, they're not isolated. They work together. They interact with each other all the time. And they also interact with your billing data. Very often, law firms treat their accounting or accounting system separate from the billing or their billing system. And you will see by the end of this presentation, integrating those two aspects will drastically help in achieving the resolutions that we talk about today. So let's go ahead and dive into our resolutions for 2017. Our first item is definitely a key focus when evaluating a firm's efficiency and workflow, and that is reducing the number of times a task is touched or data is entered. Reason being, not only is this time-consuming, but keying errors do happen. The more you touch a specific piece of data, the higher the likelihood is that there will be a mistake. And since law practice management and business accounting are often in two separate systems, it's essential that the same data appears in both systems. Very easily there can be a keying error that occurs that makes the data in each system not reconcile with each other, not match up, and finding those issues can be a nightmare. And very often exports, imports, syncs, those types of tools, they're not always stable and they don't always work properly. So you don't want to rely 100% on those applications either, because you need to always be on top of that, double check it, reconcile, and make sure they're doing the job correctly. So in addition to saving some time and increasing the efficiency of your firm, combining a lot of activities in one area will reduce the risk of errors as well. Our second item is with ensuring proper handling of client trust funds. So whether it is in trust accounts or in business accounts, if it is allowed in your state, proper due diligence is absolutely required. So let's talk a little bit about client funds in general. There are two types of client funds. You have operating retainers, which are the advances received into the operating account, and trust funds, which can be retainers as well as just general client funds received into the trust account. You must note, though, that operating retainers are allowed in some states, but not allowed in most. So please check your state requirements prior to accepting operating retainers. But I do want to give a layout of both because we have a variety of locations and law firms and whatnot on the call today, so I want to make sure to address both types of funds. So for operating retainers, just as with trust retainers, operating retainers are booked as a liability when deposited. So even though it's in your business account, it's still a liability to the firm, and only move to income as work is done or those expenses are incurred and reimbursed. So even though it's held in your general business account, it is very important that the retainers are segregated within your accounting system and only applied when earned. You should have a really good sense, just like with a trust account, you know which funds belong to each matter. When you have operating retainers, keep in mind that's thrown in with all of your other operating monies. So you want to make sure that you still know what may be client funds, and that cannot be recorded as income until it is earned. For trust funds, and of course, I'm sure you all know the basics of trust accounting. You need to have a separate bank account, tracking client transactions, moving the retainer funds, only after that income has been earned. Those are kind of the basics. And for most, holding funds in escrow, for instance, or maybe a judgment that's held on hand, that's clearly a liability to the firm. That's pretty clearly understood. But why are retainers and advances classified the same way? If that's money that you intend to earn, why is that recorded as a liability? Well, that's because the funds remain the property of the client until the revenue has been earned. So until it is invoiced and approved, that money cannot become income for the firm just yet. So it's important to understand the difference. Even though it could be a retainer that is fully intended on being earned very soon, it cannot be moved over until it's actually earned. Now, as the fiduciary, it is very, very important that client funds are segregated. That is the #1 rule in trust. You need to make sure that each matter has its own ledger in terms of balance and transactions, and it's very clearly understood both within whatever system you're using and the reporting that comes out of that system. If you ever were to get audited, of course that's what they look for, those individual ledgers, the individual balances, making sure there's no overdrafts because that too is not allowed. You need to make sure that that's properly tracked. Trust activities never appear on the profit and loss, but they are an activity of the firm, so they're going to be part of the overall financial picture, which is on the balance sheet. So they will show up there, and eventually when they are earned and applied towards your fees, then they will become income. So many firms don't understand that concept, so I want to make sure that's clear. That is a proper way to handle trust funds from an accounting perspective. Number 3, increased client cost recovery. It is not uncommon for matter expenses to be paid out of pocket from the accounting software. Maybe a check was cut or a credit card was used, and then fail to be posted to the matter. And I'm sure many of you are thinking, yep, that's happened to me once or twice. I've paid something out of my pocket and completely forgot to pass it through, and I never got that money back. And that results in a slippage of income. This is income that just slides right out of the pocket and is easily preventable if you have the right tools in place. You also want to make sure overhead is captured in that regard. Those, printer expenses or maybe a postage meter or whatever you might be using that eventually gets passed on to the clients, you want to make sure those get captured as well. And ensure those costs are booked from an accounting standpoint and passed through as an expense card all at once. Now, we'll show you a little bit as to how that happens, but it's important that that gap, that misstep that happens so often, does not occur. And then there are accounting issues. How do we book these matter costs? So let's talk about that. There are 2 types of matter costs. There are direct hard costs, which are expenses paid by a transaction. Maybe it's a check or a credit card that is then directly attributed to the matter. This could be a filing fee, an expert witness fee, anything of that nature. It's a direct link between the transaction and the matter. It is important to enter credit card transactions as well. Many of us use our credit card, our business credit card, to track both business expenses and matter costs. Those filing fees, you go to the courthouse and you may pay a bunch of filing fees with one credit card. That's great, it's convenient, it's easy to do, but you need to make sure that those are passed through to the matter so that you get reimbursed for them. In terms of how to set up your credit cards, it's okay to have one general business credit card that you use for both business and matter costs. That's perfectly fine. Some firms just find it cleaner and easier to use separate credit cards for those purposes, but it is not necessary. Some firms segregate by practice area or by attorney. Again, not necessary. It may just make the bookkeeping a little cleaner for you. But those are some things to consider if you do use credit cards. And as I mentioned, those indirect soft costs, those are the photocopies, postage, maybe administrative activity. You need to make sure that those are captured on a regular basis as well. So here's an example of a firm that has chosen to handle matter costs for hourly matters on the profit and loss. And the reason why I'm specifically stating that is every law firm could record their costs a little bit differently. There are two options. There's reimbursable client costs, which is a profit and loss income expense account, and then there's advanced client costs, which is an asset account. It is best to speak with your accounting advisor or bookkeeper as to which you should use or how you should record it, because this is a tax decision the firm needs to make. That is sometimes based on your area of practice, the type of work that you do, how you typically receive expense reimbursement. So there's a couple questions associated to that as to how you should post your expenses. So I do want to put that out there. This is an example of a reimbursable client cost matter. Now once that decision's made, whatever it is, however you choose to post, it should be kind of a set it and forget it setting, because if you need to think of that every time you enter an expense, it's something that will likely drop through. So let's just take a look at this example. The first two costs, we have filing fees and transcription fees. These are direct costs, meaning the firm paid a third party on behalf of the client and will invoice the client for this expense. That is a direct cost. Photocopying, however, is an indirect cost. This is something that's already a part of the firm's overhead or the business expenses, and they will eventually pass that through to the matter. It's not a direct transaction. You didn't pay $23 specifically for this matter and are then passing it through. So this is indirect, and it should be recorded and posted as an indirect reimbursable client cost in this example. And finally, there are also sometimes costs which the firm does not want to bill the client for. Those are non-reimbursable client costs. In this example, it's auto mileage. So it's an expense that you might reimburse the employee for, the attorney, the paralegal, whoever it may be, but you're not billing the client for it. So then it should be notated as a non-reimbursable. So this is an example of the three types of postings for this type of matter. We will then later talk about how that income comes into play for this exact example. So as good as general accounting software is, and a lot of customizations that can happen, there's very often a struggle with allocating revenue receipts. That's what takes us to resolution number 4. And this is key because it's not just like the billing system cares, is it paid, how much is paid, what's the new balance? That's all that's really relevant. From an accounting perspective, it matters how much was received, what portions of the invoice that money is going towards, what portions it should not go towards. There's a whole separate side to how that payment is processed. So what do I mean by allocated correctly? This is the order in which allocation of payments from your clients should be made, and this is per legal accounting. So this isn't the same for every business. This is specific to the law industry because you have these matter costs. You have the direct and indirect costs that you need to track on an accounting level. So liabilities and costs must be paid first prior to applying anything to income. To do this properly in general business accounting software, which many of us use, the process requires, think of this for a second, splitting a single invoice into several different invoices and applying those payments individually. So let's say you have one invoice that has fee, cost, late fee, discount. in a legal specific tool that has accounting, and I'll show you this example in CosmoLex, it will apply them in the proper order, that payment, and that includes partial payments. It'll go first to all the liabilities and costs, and lastly to income. In a general accounting software, you would have to make an invoice for the liabilities, an invoice for the costs, an invoice for the fees, an invoice for the finance charges, and then apply them in the proper order individually. That's the workaround that many consultants and bookkeepers that I've worked with have used when using general accounting software. Even when you're using exports, imports, syncs from practice management applications, that does not solve the accounting issue. How the accounting payment is processed is in the accounting software when you're using two separate programs. So this can become a very cumbersome process, and it's important to know what that order is, why is it important, and one point to make is fee income is very last. If it's a full invoice payment, it should be in the right order, but it's not essential. If it's partial, that's when it really becomes a big deal, because if I receive a $500 payment on a $1,000 invoice, I most likely haven't even earned fee income on that invoice yet. Why is that essential? Well, for tax purposes. It might be end of year at that time and you're going to file your taxes. You don't want to file inflated income. And secondary is if you're doing any sort of income tracking in your firm, which is actually one of the resolutions we'll talk about, where you compensate your team based off of the income that's brought in, you don't want to compensate them if all of the payment went towards reimbursed costs or late fees. That's not what they worked on. That's not the work that they brought in. You want to compensate them on the fee that was earned. So that's when this order becomes so essential for law firms. Now this is taking the example we had before and following that through to the reimbursement from the client. So note that I have in the center the expense account that I referenced before, and on the far right is a related income account. This is where the income should get posted when it's received for those particular expenses. So notice I have reimbursable client cost posting. The income for that comes into reimbursed client costs, which is an income account. Indirect reimbursable client costs, the third item there, the income comes into reimbursed client costs indirect. Now you may have different names for certain accounts, but they all, in this example, when using reimbursable client costs, there is an expense account and there is a income counterpart. The last example though, which is something that we always like to show, is remember that auto mileage we didn't bill to the client. We entered it as a non-reimbursable client cost. Therefore, no income comes in, it's part of the firm's expenses, and no entry should be made on the income side. So this is just a simple example of showing how posting works. Our fifth resolution, gaining tight control over credit card payment process. Now, credit cards are a great convenience for you and your clients. However, it is important to know the accounting challenges that can arise if the right tools or providers are not being utilized. Whether you're currently accepting credit cards or considering it for the upcoming year, perhaps it's something you want to start doing, there are some questions to keep in mind. And the first set of questions is in regards to the merchant provider you use. Do they support operating and trust accounts? Credit cards are not just for invoice payments. You may want to accept trust retainers as well, and that's something to consider. And if you want to accept trust retainers, they need to be able to have that functionality. How are processing fees handled? You need to be aware of how the fees, because every merchant provider has transactional fees, you need to be aware of how they're charged to you. Typically, a monthly deduction is made right from your account. However, some merchant providers do not take compliance into consideration when handling trust accounts, believe it or not. And that goes all the way from the big banks, because keep in mind, again, you're a unique sector. You are handling trust accounts, which is unique to the legal industry. Big banks work for everybody. They're not going to follow all the guidelines for every single type of area that their clients work in. So it's important to think about when you're picking a merchant provider. What they might do, and many do, is they deduct the fees from the trust account. That will commingle your funds and make reconciling a mess. You're technically overdrafting, which will result in, taking from different clients from their fund you're taking for your fees, which is something that you cannot do. So if you want to process trust transactions, don't feel, oh, I can't use a merchant provider then because that is unacceptable. You can choose a merchant who knows how to work with trust accounts and only deduct fees from the connected operating account. It's possible. It's available with several merchants, and I'll give you an example of that in a moment. Does the service integrate with your billing program? And this is actually really important because while credit card payments are an added convenience to your clients, you want to also streamline the process on the back end as much as possible. And this is one improvement, even if you're already accepting credit cards, to really take into consideration. An example, CosmoLex integrates with LawPay for credit card processing. And by the way, LawPay is one of those merchant providers that takes trust compliance into account when processing these transactions. Through our integration with them, the client receives an invoice, pays online, and the money is received. However, LawPay also communicates back to CosmoLex and makes the transaction entry, and the invoice is updated. So this effectively eliminates the need to do any manual entry once those payments have been received. So there's two parts to the payment process. It's your client payment and then you recording that payment, and this takes it full circle. You must keep in mind though that all programs and integrations differ, so be sure to keep this in mind when you're choosing a provider or if you're looking for another billing software. Do your research. Every integration can differ, even if it's with the same partner. There can be a different setup there. Now, what about my internal setup? You know, what are things that can be challenging when accepting credit cards? Well, when you have a separate accounting system, it won't know what invoice has been paid off until you tell it. So when you charge your client in your billing system, the money is going to show up in your accounting system. How do you account for it? How do you know what equals what? Then you have something called credit card batching. When the credit card company deposits funds in your account for payments, which were received by your clients, it's commingled with payments by other clients. What I mean by that is maybe today you received 5 invoice payments totaling $10,000. Well, tomorrow or tonight, whenever it may be, you'll get a deposit from, say, Visa, MasterCard, whoever, for $10,000. Great. What is that for? Your accounting system says, okay, good, we got $10,000 on the operating account. Your billing system's like, okay, I've got all these unpaid invoices. What does that go towards? So it requires a lot of manual reconciliation in order to see what adds up to what. How will you handle disputes or chargebacks? So you have voids. You may refund the money if there's a mistake made and you need to recharge the right amount. A chargeback, maybe the client disputes the fee, and if you can't overcome the dispute, the money may be taken out automatically. In either one of these examples, how would your billing and accounting systems keep track of all this? How will they know what was refunded, what was taken out, what needs to be given? There's no easy answer when using separate systems. It can get fairly complex. There needs to be a daily reconciliation process for sure to make sure everything adds up, but there is a better way, and I'll show you that a little bit with CosmoLex as an example. And lastly, processing fees. In addition to the payments, any merchant fees need to be entered monthly. So let's say you're doing it properly and the merchant takes those fees out of the operating account. Great, you need to make sure those are recorded in the operating account in the accounting portion of whatever program you're using. Resolution 6, start tracking income by party. If you have a partnership, whether it's 2 partners or 20 partners, very often income needs to be tracked by party. If you're not doing this yet, I highly encourage you to. Does it have to be part of a compensation model? No. It can be used just for reference purposes, just to see where the money is coming in, just for performance or productivity measurement. It's very valuable information. It's not just the attorneys and the timekeepers, but originating attorneys. Who's bringing in these leads to the firm? Who's responsible attorney, work attorney, timekeepers? There's so many people that contribute to a matter. Not only would it be useful to know who brought in what, but also you could take it that step further and have a compensation model and actually compensate the different parties based off of all that information, based off of the work that they did or the matter that they're assigned to. So it's something to take into consideration. Very valuable, like I said, but can only be simplified when billing and accounting are together. If you have that separate, it can be quite complex. All together, though, you get a nice streamlined flow with that. And resolution 6.5, so you're probably wondering what that half means. Well, it's just taking our 6th resolution just one more step further. And the reason why it's kind of, somewhat of a resolution is because it might not apply to everybody. Some firms choose to focus on just one specialty, and there's many like that just have an area that they focus on and they're good at it and that's it. However, if you work in 2 or more areas, or perhaps looking to expand into other areas, tracking your income by practice, practice type, I guess you could say, that will help you to make various business decisions for the year to come. And how will you go about doing that? Well, there are ways, if you have the accounting and the billing together especially, you can set up accounts for this money to go into, and I'll show you an example of that in a moment. And it will let you know, for family law, I earned this. For real estate, I earned that. For bankruptcy, I earned this. And it will allow you to analyze the profitability, evaluate growth opportunities, maybe even figure out where your marketing opportunities are or where your resources should go. Overall, just want to make informed management decisions, and that can definitely help. So by including the practice management, which is usually the billing, calendaring, documents, tasks, all of those items, along with your accounting, you end up with a complete law firm management solution. And the 2 items here, you see obviously we're bridging a gap because very often they're separate. As I stated, you might have a billing or practice management software and accounting somewhere else. The 2 interact so often, and there's so many of these resolutions that can be easily maintained by bridging that gap by having an all-in-one solution. So that's what I want to talk about right now. I just want to give you a quick overview of an example of an all-in-one solution, and this is CosmoLex, to show you some of the resolutions we've talked about today. So the first thing I want to show you is when dealing with client funds. That was one of our main areas we talked quite a bit about. And you'll see here, under the matter area, I have a listing of all of my matters. Okay, so I have all of my matter information, but in addition to just the client, the matter, etc., I have financial information. What's unpaid, what's unbilled, and do I have any funds in operating or trust? Right away, I know exactly what's available to me, what is received, whether it's an operating retainer or trust retainer, it's divided out by matter. That is very important. Also, having some safeguards in place, especially when you're dealing with a trust account. Let me actually use this example right here. I have just over $2,200 in trust. If I try to cut a $3,000 check, I'm not allowed. You cannot overdraft because that will lead to commingling. In general accounting software, that is allowed. So while you can still use general accounting software, you are the one that then needs to keep an eye and make sure that doesn't happen. There's nothing preventing you from doing those types of actions. Client cost recovery, we talked quite a bit about. We're doing those hard costs. So this is both an accounting resolution and also can help with that double data entry that I mentioned earlier on. These are those direct costs for that particular matter. So let's say this is an out-of-pocket expense, $25 filing fee to the courthouse. Now this top portion is the transaction. This is a check that I'm actually going to print from the system. I'm not using a separate system for my accounting. I'm doing it right here. And down here is the expense card that I'm creating. So I actually cannot leave this screen without completing this expense card. So I have the transaction and I have the expense so that that will be reimbursed, or hopefully will be reimbursed. At least it's invoiced to the client and they are aware of it and they know they need to pay it. It won't slip through in that regard. But also there's some accounting going on. There's an account field here. I mentioned how those costs should be posted. Well, guess what? That decision's already made. You don't need to worry about it. There's a couple accounting settings where you say these types of matters are reimbursable client cost, done. You don't have any other options except for non-reimbursable in case you don't want that cost to be reimbursed. So you're doing the out-of-pocket expense, the expense card, and the general ledger entry all at the same time. That, of course, reduces double data entry and allows to increase accuracy and reduce the risk of mistakes. Another part I want to talk about is in terms of your invoices. I mentioned you post these expenses, but then when the invoice gets paid, how does that get allocated? And this will take us into one of our other items as well, so I do want to show it. I'm going to go to a paid invoice. And this has a whole bunch of information on it, fees, costs, etc. right here. So you see I have everything that was on this invoice, some fees, some costs, some discounts and overhead. I applied a payment. But these allocations down here, which were part of our example earlier, were done for me. I didn't have to go into an accounting software and make all these individual entries. They were made because the system knows what was invoiced and it knows what the matching accounts are. So it can make those entries for me. And look here, I've even tracked this matter as a family law matter. Setting up the matter, you can do these types of things. We're saying this is a family law matter. Even for the fee distribution, I can see what parties. I can set up originating attorney, responsible attorney, percentages. All of that's with the matter set up, and that's it. The invoices get sent out, the payments get received, then you're able to do that proper reporting because that process flows all the way through the billing, the accounting, the reporting, and you can get that unified view of the entire billing and payment process. All right, so those are just a couple examples I wanted to show you visually. So let me just jump back to our presentation here and just show you that overall what CosmoLex has to offer. We are an all-in-one solution in one login, web-based of course. So we do have those practice management items like the legal billing, the calendar tasks, the documents and email, but we bridge that gap by having the business accounting and the trust accounting as well.